Welcome to Real Estate is Taxing, where we talk about all things real estate tax and break down complex concepts into understandable, entertaining tax topics. My name is Natalie Colati. I'm your host, and I am so excited that you've decided to join me. Hello, everyone, and welcome to today's show. So we are only a few days away from the extended deadline for entity tax returns. So this is the filing deadline for anything that is a pass-through, typically our partnerships and our S-Corps. And this deadline is normally September 15th. It's September 15th for our entities, October 15th for our personal return. But because this month, the 15th, is on a weekend, our deadline for entities is going to technically be September 16th for this year. So for today's show, we are going to talk about this tax deadline, who it applies to, and some common misconceptions, and what your options are if you think you might miss this deadline. As a starting point, to kick things off, the September 15th, or technically 16th deadline, is the extended filing deadline for S-Corps and partnerships. These are normally due on March 15th, so if you file for an extension, that gave you an additional 6 months to file. It does not give you an additional 6 months to pay. So the same thing happens with your personal return. If you filed an extension for your 1040, then you have until October 15th to complete your 1040, your personal tax return. However, your income taxes due should be paid by April 15th. Extensions give us more time to file. They do not necessarily give us more time to pay. Before we move on, let's do a quick recap on what's an S-Corp and what is a partnership, because there are a lot of people who do not realize they might have one of these. An S-Corporation is either a C-Corp that elects to be taxed as an S-Corp, or an LLC that elects to be taxed as an S-Corp. For either of these circumstances, you file Form 2553 to be taxed as such, even if you're starting as an LLC. You don't have to file anything else first to change your LLC to a corporation and then to have it taxed as an S status. It all happens in one step, and that is what it takes. The other common return that is going to be due in a few days is partnerships. There are multiple ways you can create a partnership, the most common being general partnerships, a business that is just operating with more than one person running it, even if there's not an entity, and also any LLC that has more than one person on the LLC. It has more than one owner. So a multi-member LLC is going to almost always default to being a partnership. And this is the most common way I see people surprised by having a partnership or creating a partnership when they didn't intend to. That is because a lot of people set up an LLC and they add their spouse to it by a default. Or they're going to do, one small real estate deal with a friend. So they do this LLC with both their names, thinking they'll just split it 50-50 at the end, not knowing they now also have to file an entire 1065. They have to file a whole partnership tax return as a result of the way they structured this. So these are really common situations. So if this applies to you, don't feel bad. It happens pretty often. Now, if you are a multi-member LLC, but the only members are you and your spouse, your married couple, and you are based in a community property state, then you might not have to file a partnership, but only in that specific circumstance. If both of those things exist, you're married and in community property state, you might have the option to treat that LLC as disregarded and not have a partnership tax return. If you are a married couple who are operating a business together without any type of an entity, you are married, you're running the business, you also have an option to file as a qualified joint venture, where you could each choose to file your own separate Schedule Cs, each report as a separate independent business, instead of reporting together on your 1040 or having to file a partnership as well. Those are a few of the nuances for times you might not have to have a partnership, but in most situations, if you have an LLC that has an S election, or if you have an LLC with more than one person, you have a tax return that is normally due on March 15th. And if you file an extension, it's due 6 months later on September 15th. But like I said, in this year, because that fell onto a weekend, it's technically due on September 16th. Now, if you have that extension filed, or especially if you don't, you will want to try to get this return filed as soon as possible, even if you don't have money to pay right now. So in any case, filing a return late and paying late is always worse than just paying late. So even if you don't have money to pay any taxes you might owe in the next few weeks, still make sure to get your business returns filed by this deadline here in the next few days for your partnerships or your S-Corp, and get your 1040 filed by the October 15th extended deadline, even if you end up paying later. You don't want to file late if you can avoid it. But we all know sometimes these things are unavoidable. Sometimes you may not have realized you had a partnership, or you forgot to file an extension, or your books aren't ready. There are all kinds of reasons that entity returns end up filed late, and there might be a few solutions depending on your circumstances. The first solution is if you have a partnership. This does not work for S corporations, but if you have a partnership tax return and you meet the requirements under Rev Proc 8435, which is the small partnership exception, then as long as you have all of the information correctly reported on your personal tax return, your 1040, following some criteria we're going to talk about, then using this Rev Proc, you can request to have that late penalty forgiven. So, again, if you have a partnership, not an S-Corp, Rev Proc 8435. What this allows is basically if there was a reasonable cause for having this late partnership, if you meet these criteria, there's a good chance you can have the penalty removed if you contact the IRS. Either send them a letter or call up and talk to them. They won't do it automatically. Okay, so let's dive into the requirements to see if you can get that penalty removed under these criteria. The first one is your partnership can't have more than 10 partners. Has to be a small partnership. The second one is that the partner has to either be all individuals or the estate of a deceased partner. So if you have a partner who is a trust or an LLC or something else, will not qualify. The third one is that each partner's share of income, deductions, and credits are allocated in the same proportion as all other items of income, deduction, and credits. So things have to be allocated to each person correctly. And each partner has to have reported their share of the partnership income or loss on their timely filed income tax return. This is what I was saying, and this is why it's important to get this return done quickly, even if it's late at this point. If you can get it done before you file your personal return, that if it's extended, isn't due for another month, you have till October 15th to file your 1040. If you can complete this partnership in time so that the K1, which reports your share of partnership income or losses, is included on your personal return and you pay the tax on your share accordingly, then you would qualify for this penalty relief. So even if right now you're having a little bit of an oh shit moment and realizing you have a late partnership tax return and you're sitting there and calculating this $235 a month per person penalty, if you can get it together in the next 25 days and get it done and finished up and get those K1s and your share of income and your partner shares of income onto their personal returns that are filed on time before their extended October 15th due date, then you can qualify for this Rev Proc 8435 as long as you meet the other criteria we talked about. Again, This doesn't apply to S corporations, and whether or not the state will also allow a forgiveness is going to vary by state. Some states might carry over, some might not. It is also important to note that there are some tax return elections that require being on a timely filed tax return. So even if you get that return finished up and you're going to avoid that late filing penalty now, there might be certain tax return elections that you might want to make but might not be able to now because the return is late. So just make sure you check that and discuss it with your tax professional. The next option that might be worth looking into if you think you might have a late filed tax return or we're coming up on this deadline in a few days and you know you are not ready, is that this year there were quite a few disasters. And if you are located or your business is located in one of these areas that were deemed a formal area of a disaster, then you might have your deadline bumped out to February 3rd. This applied to quite a few circumstances this year. And again, I will note, so this extends any deadlines that occurred after the disaster. It doesn't apply to your taxes owed in a lot of these situations. Because, for example, your personal income taxes are due by April 15th because filing an extension gives you an extension of time to file, not to pay. So if your personal return is due in the next 30 days, but you're in one of these disaster areas, then your filing you might have more time for. That could be due February 3rd. However, your payment is still late either way. So if you have a partnership or an S-Corp tax return that are going to be due in a few days, but you know you are in an area that might have had a qualified disaster this year, then you might have that deadline pushed out to February 3rd under this disaster relief. So there is a full list of qualifying events, disasters, what states, counties, etc. fell under it, and the specifics on the filing due dates and what was impacted on the IRS website. And I have the link to that in the show notes. So go to the show notes to get that full link to the disaster relief list and see if your circumstance is listed there. Just a few days ago, there was a release for Connecticut that had to do with some of the flooding, severe storms, and landslides, where various deadlines were bumped out to February 3rd. A couple days before that, we had another posting related to New York. Same thing, severe storms and flooding, bumped some deadlines out to February 3rd. We had several counties in North Carolina, and I believe all of South Carolina was extended due to the hurricane impact that we had there a couple months ago. And it goes all the way back to some additional situations that were a little earlier in the year, including some areas of Texas from a hurricane there, some Kentucky from some mudslides. There was Georgia was impacted from Hurricane Debbie. So lots of different areas where you may be covered to have your due date bumped out. Now, I will add the caveat that a lot of people will say that if you and your business are based there, or if your tax preparer is based there. So the idea being if you live in like Seattle, but your tax professional is in South Carolina in one of those disaster zones where businesses and people were bumped out to February 3rd, that because that's who does your taxes, that yours aren't due till that date. And this isn't clearly stated. So the nuance to it is that it's somewhat based on the ability and who and where your business records are kept, allowing the filing. So if that professional has all of your records, like you mail them all of your documents, or they do all of your bookkeeping, and they are who receive all of your bills and do all of your invoicing, etc., then you have a good argument. However, if you have just uploaded PDFs to a portal, and you could just as easily upload them to another tax professional's portal, it might not qualify. So I wouldn't fall 100% on that being a saving grace. But if you or your business is based in one of these impacted disaster zones, then you might have a bumped out filing deadline into early next year. So it's worth checking out. Again, check the show notes to get that link to the IRS website for the full list of locations. The last small item I'll mention that's not specifically due to the filing or filing late, but just something that some people don't realize, and I find this catches quite a few of my clients off guard each year. So when it comes to an S-Corp or a partnership, the entity itself typically does not pay tax in most situations. So the amount of income or loss is calculated and figured out on those returns, and then each of the partners or shareholders receive a K-1 that gives them their portion of income or loss, which they report on their personal tax return on your 1040, and that's where the taxes are paid. It all nets out on the 1040. So even though at the entity level for an S-Corp or a partnership, there's typically not income tax paid, depending on your state, you very well might have franchise tax due each year when you file this. For example, in North Carolina where I am, there is a $200 minimum for S-Corps for the first $1 million pretty much of income. So the majority of S-Corp owners here still have to send in a $200 check each year to the state as a franchise tax, even though the S-Corp itself isn't paying any kind of income tax based on the exact amount of earnings or anything like that. Even if you have one of these pass-through entities, just confirm and see if you do have a state fee that is also due to make sure you're not missing that each year as well. If there is a franchise tax for your state, or there might be an annual filing requirement, or something else outside of your standard income tax return filing. So that is what I have for you guys. I wanted to keep it short and sweet for this show. I know a lot of tax professionals listen and that you guys are going to be super busy this week. If you have questions, feel free to hop into the Facebook groups. I'll link them below in the show notes. And as always, I hope that you guys have found value from today's episode. Don't forget to check out the list for disaster areas to see if that buys you some extra time. And if you have a partnership that is going to be late, don't forget to check out RevProc 8435 and see if you qualify to receive some relief from that late filing penalty. I hope you guys have a fantastic September 16th filing deadline. And as always, I will talk to you next week.